Hi, everyone. Thank you for joining today's webinar. My name is Sonia Siddiqui, and joining us today are Jane and Emily from RBC. Hi, ladies. All right, well, thank you. Before I hand it over to them, I just want to make sure that everyone is properly connected. Please note that you are all in listen-only mode, so we won't be able to hear you, but Jane and Emily will be taking your questions towards the end of their presentation. For that, please type your questions into the Q&A tab, and we will take your questions from there. For best results, please use a laptop or a desktop computer using Google Chrome, and there will be a recording of this webinar later. You will get it sometime tomorrow. Just to tell you a little bit about ACCES, we've been working with job seekers such as yourselves for over 30 years, and we work with several employers, and we've got great sponsors like as RBC, and they do monthly events, online events with us. And well, now everything's online at the moment, but they do several events with us on a monthly basis. And for our programs, we've got over 30 tailored programs that include our sector-specific programs as well. We've got 6 physical locations in the GTA at the moment, and our newest 7th location opening up in Newmarket soon. And right now, our main location is online. So that's what online services is bringing you. All the webinars and workshops transition to being online. So I'm going to hand it over to Jane.
Thank you, Sonia. Good morning. Yes, still good morning, everybody. My name is Jane. I'm the Assistant Branch Manager at RBC at Meeting Place. It's such a privilege to be here with all of you today virtually. So I'll tell you a little bit about myself. Funny that I was just over the long weekend, I had an opportunity to look into some of my memories because we're cleaning up some room for a little girl that we're expecting in July. So really excited about that. So as I was doing it, I opened one of my report cards and it said, my teacher's comment, Jane is starting to learn a couple of small vocabularies like pair of eyes, nose, years. So that was many, many years ago, but myself and my family was a newcomer at one point. And looking back now, fast forwarding, wow, here I am talking in English to all of you and wanted to welcome all of you here today. So I know that you're probably in the midst of your job searching journey or settling down in this new country, especially during this COVID time. I just wanted to say that everything is going to be okay because I turned out just fine. So I graduated from U of T later on. So really proud of that. My parents was very, very happy and very lucky I got into RBC about almost 8 years ago now. So slowly worked out from a client advisor role into a assistant branch manager role. And I have to say, so far, this is one of the most fulfilling roles because I get to do what I'm really passionate about, which is helping people and our communities thrive. So I wanted to hand this over to Emily now to give her an opportunity to introduce herself. But before I do that, I just wanted to let you know that Emily is actually a coach of mine. So the things that I do for my job, she helps me to make sure that I do a really good job in supporting all of you and our newcomer community. So Emily, over to you.
Thank you so much, Jane, for that warm welcome. And trust me, we learn from each other. So I would say we're coaches to each other, that's for sure. So good morning, everyone. Thank you so much for taking time out of your day to join us. I really hope that it's beneficial for you. As Jane mentioned, my name is Emily Stewart. I'm a national enablement coach, but right now, of course, I'm not doing too much travel. I'm located in Toronto. And I've been with RBC for over 12 years, actually. I joined as a client advisor, which is an entry-level job at RBC, which I would say was one of the best moves that I made in my entire career because it really helped me learn how to help our clients from the ground level up. And it was really an incredible opportunity that I took right out of university. I'm an alumni of McMaster University in Hamilton. And I joined our national office team about 2 years ago in a coaching role, which has been incredible. And I love help supporting leaders like Jane across the country at our branch formats. And when I'm not with my RBC folks. I love to be active, and I'm a runner. I have a dog, so it's really great to have all of you with us today. Thank you for joining us. With that being said, I would love for Jane to talk a little bit about the meeting place that she works out of right now in Markham.
Thank you. So next slide, please. So RBC Meeting Place, for those who don't know, it's basically a brand new branch and that's designed specifically for newcomers to Canada. So this location is very unique in the way that if you walk in, imagine you're going into an office building. On the 4th floor, if you enter one door, on the left is ACCESS Employment, which is our great partner, and on the right is the RBC Meeting Place, which some of the pictures are here. If you're ever, after this COVID is behind us, hopefully you can visit us. There's also another location in Brampton, actually our first location that was opened up. Ours is the second in Greater Toronto area. So as mentioned before, this brand new branch is completely designed to help you and support you through your settlement journey here, as well as any banking or not even banking related needs. We want to make sure that, when you come to ACCESS Employment, your banking needs are also taken care of or your additional questions are answered. Because like I mentioned, my team and myself are newcomers at one point, and we've been through some of the things that you've been through, and we're hoping that we can help you and guide you through that. A part of what we do, next slide please, is to work with organizations like ACCESS to do a lot of advice events like this one. We offer information and guidance. So some of the popular advice events we do, like this one, every newcomer should know about credit. We do a little bit of mentoring sessions as well. We do fraud prevention. The list goes on, but definitely check out the ACCESS website. We have our monthly, like Sonia has mentioned, various topics to come.
Perfect. Great. So I will kick us off here. Thank you so much, Jane, and the work that you and your team do with ACCESS is just incredible. So as a formal welcome, very good morning, like we've said, and thank you so much for joining Jane and I this morning as we discuss one of the most important aspects of your financial life, which is your credit. Before we dive into it, I did want to take the time to comment on these unprecedented times that we're seeing as a result of COVID-19. RBC is aware of what's going on in the world, and there is an increasing need more than ever to deliver advice virtually and often. As a bank, we recognize that needs are evolving, and there are updates in place to help support our clients. Wherever you bank, whether it's RBC or any of the other banks, we encourage you to connect with your local advisor and ensure you know the different relief programs that are available to you during these times. Here at RBC, we introduced a client treatment plan to help support you during these times. Our commitment to our communities is to keep showing up and supporting more now than ever before. With that being said, I want to thank you again for taking the time to join us, and I really hope that you leave here with some valuable advice that will help you going forward. I did already pass it over to Jane, so that's good. She's given her opening remarks, so let's just go directly to the next slide. Perfect. So let's just have a little breakdown here of what we're going to cover today. So we're going to cover some important stuff that should apply to everyone on the call. So let's get right to it. So we're going to cover up 3 parts. So part 1 will be defining what credit is. Part 2 will be getting credit. And part 3 will be building good credit with good credit habits. And then from there, we'll go to the Q&A. Great. So you can leave it right on that slide. Thank you so much, Tanya. So for those of you familiar with the basics, this will be a refresher course for you. And for some of you, this information will be new. So we'll build with simple, and then we'll get to a little bit more of the in-depth information as the presentation goes along. So credit in its simplest form is a way to borrow money. It's the ability to get something before paying for it on a promise to repay it in the future. So the next questions would be, who are the players in the game? And we can go to next slide. So first up, you have the borrower. The borrower is the person receiving the money, the goods, or the services on a promise to pay it back. On the other side, you have the lender. The lender is the person who is willing to lend money, goods, or services to someone else and get paid back later. The amount that you borrow is called the principal. I'm sure everyone in this room, let's pretend we're all together, has lent money to a friend at some point. Big or small, the amount is considered the principal. So let's just say a friend asks you to borrow $15. What are some of those factors to think about when somebody asks to borrow money from you? Next slide. So lenders charge interest for the risk of lending their money. It's typically a percentage of the amount borrowed, or as we now call it, the principal. It compensates the lender for the risk of lending it, as there's always a risk that they may not get it back, and that's why lenders charge interest. So when you think about looking at credit cards, one of the things that you always take into account is what is the interest rate? Well, that's because a person is taking on a risk to lend you money. The most important rule about borrowing on credit that everyone must know is that, next slide please, drum roll, all forms of borrowing come with a cost. It's never free. To keep your credit score in good standing, you must pay back the lender, whether it's a bank, credit card company, car dealership, even your friend. Don't worry if you don't know what a credit score is, because we will get into what this is later in the presentation. So you must pay the principal, or the amount borrowed, plus the interest. This means that you will always pay back more than what you borrowed. This is the most important rule of credit. The more that you are borrowing, the more expensive it will be in the long run to pay it back. Next slide, please. Some of you may recognize this, whether you're an RBC client or not. This is a lovely statement that we get monthly. It's important to know how to read your credit card statement so you're not missing due dates and you're not paying more than you have to in interest. It can creep up really quickly. The ideal is to pay your balance off by the payment due date, but if that's not possible for some reason, you need to make at least the minimum payment so that you're paying the principal plus the interest. Paying off the minimum amount doesn't impact the balance. You're basically just paying interest to keep it in good standing. Just say you were to decide to get a student loan. That does work a little bit differently. While you're in school, you only have to pay off the interest so that your payments are lower. Once you graduate, you'll have to start paying back the principal as well, so your payments will be higher. The assumption is that you'll have a job in your field and you'll be able to afford to make these payments. It's really something to think about and be aware of if you do decide to get a student loan. Another thing worth mentioning is the electronic options that are available to you through online banking. That will definitely make your life a little bit easier when it comes to credit. So for example, when you think of e-statements, auto payments, payments through online banking, even your points or cashback perhaps, there's also alerts when due dates come up. These are all examples of things that you can use with credit to make your life a little bit easier. Next slide. So before we go further, I do want to discuss one area that I get a lot of questions about. What is the difference between debit and credit? So credit is money that is borrowed, commonly in the form of a credit card. Whereas debit draws on money that you actually have in your bank account. Perfect. Sorry, that's so good. So debit draws on money that you actually have in your bank account. So most standard bank accounts will come with a debit card. Physically, they look very similar to credit cards and are used similarly when you shop. You tap and pay. But a debit card takes the money directly out of your bank account. You have to have this money in your account in order to cover your purchases, or else your transaction will most likely be declined, and nobody wants to have that happen in a store. So once again, purchasing on credit is when you're buying something with money that you're borrowing. In most cases, the interest will start to accumulate right away. Purchasing with debit is buying something with money you have in that moment. So all of the factors we talked about that affect credit just a moment ago do not come into play when you purchase with debit. It's basically one and done, you've made the purchase, and it's done. If you're wondering right now how to make an online purchase if you don't have a credit card, there is something that is called a virtual Visa debit, and you can talk to either your advisor here at RBC or your advisor at your bank about what a virtual Visa debit is, and that's basically where you're using a debit card to make online purchases. So let's move on. If you do not need to borrow money for an important purchase or something unexpected comes up, you have choices. There are many different types of credit to choose from, but you have to make sure that you choose wisely. Next slide, please. The three most popular types of credit in Canada are as follows. There's credit cards, there's personal loans, and there's also lines of credit. But once again, it's never free. That's the most important thing at the end of the day. You have to pay back the principal plus the interest on anything that you borrow. Next slide, please. So let's start with credit cards. Obviously, most people probably right now either have a credit card in their pocket or are thinking about getting a credit card. So let's go through some tips on how to start building your credit history and credit score early. Again, if you're not sure what we mean by credit history or score, we will definitely go into more detail shortly. Credit cards help with smaller purchases and online purchases. Today, it's very common practice that you need a credit card for most things that you're going to be doing. So when you think about it, and especially during the times that we've been living in right now with COVID-19, if you're like me, you haven't been leaving the house much, you've been relying on online banking. So whether it's going on Amazon to buy new sneakers or workout equipment, booking a trip for in the future, or paying for your Netflix, Apple subscription, the kids want Disney Plus, you only can use a credit card for those purchases. In general, a credit card is not secured. What does this mean? It means that you don't have to put up collateral or money to qualify for the maximum credit card limit that you've been approved for during the application process. Collateral is like an asset, for example, a car that you own outright or a piece of property like your home, that a borrower offers to a lender as a security for a loan. Credit cards don't ask for this, and your credit limit is usually based on your income. Credit cards typically charge high interest rates, so this is something to keep in mind. Generally with credit cards, you'll see interest between 10 and 20% for two reasons. First of all, a credit card is not secured, just as we described, therefore it's more risky. And the second reason is to offset the risk that the borrower may not pay back the loan. Remember earlier when we talked about risk factors, this is the biggest one for credit cards. Unfortunately, there's many people that have charged things to their credit cards and they just don't have the income to pay it back. The bank is now taking a risk by lending that money, and if it's a write-off or if they have to close the card and not get the money back, they have now some way to recoup that money through the interest. The term, let's see, what are we? Oops, Okay, so just getting back on my slides here. So payments on your credit cards are due monthly, or more specifically every 21 days. It's important that you keep track of your due dates by checking your statements online and setting up payment alerts. Very, very key to keep in mind. A smart way to avoid paying interest is by paying off your balance or the amount that you've borrowed in full by the payment due date. That way you won't be charged any interest. And that's key because you can take advantage of points programs or cashback programs without having to actually pay any interest. If you can only afford the minimum payment required by the due date, it will include principal plus interest charges. And if you miss this payment altogether, many banks will increase your interest rate, usually until you make your minimum payments again, and then the rate goes back down. So it's really, really important that you can at least make those minimum payments. Next slide, please. So what you may not know is that all credit cards are not the same. Credit cards often come with additional rewards that can really add up as you use your credit cards. These rewards are definitely handy and unique ways to help you save money on your purchase. For example, some come with cashback credits based on your purchases. It could be 2% cashback on grocery store purchases and 1% cashback on everything else. At the end of the month, this percentage is then applied to the balance owing on your card. Some give you rewards points that you earn with each purchase, and then you can redeem them for gift cards, merchandise, or travel rewards. Some of them you can redeem for charity and even financial rewards, which is really great. For example, if you wanted to put some of the credits into a tax-free savings account, or maybe even your child's RESP. And some provide extra travel insurance coverage or extended warranties on your purchase. I think about myself personally when I went on my honeymoon and my luggage was left in Toronto when I was going to St. Lucia. I was so happy I had insurance on my credit card. I was able to call the Infinite Avion Visa. They were able to give me a credit to be able to get some of those essentials until my luggage came. So not an essential way to start a honeymoon, but I was so happy that I had that coverage. It's also important to take time to compare different credit cards because some have no annual fee and interest rates can vary between cards as well. So when choosing, it's really important that you take the time to think about what's important to you and what are you looking for in a card. Because what I'm looking for with travel rewards and coverage may be different for yourself if you're looking for cash back as well as credit options. So with that being said, we're going to move on to section 2. Next slide, please, and I'll turn it over to Jane.
Thank you very much, Emily. That was really good information, but there's more to come. So in this next section, we're going to talk about getting credit. So why would someone want to access credit? There are many different reasons. Maybe you really need to buy a car. Maybe you want to start owning your own business. Maybe you have classes that you wanted to take to upgrade yourself or borrow money for rent. There could be various reasons why you want to access credit. Next, please. Anytime you want to borrow money, lenders like RBC will look at a number of different factors. We call them 5 C's of credit. So first one, your character. That is how responsible you are when it comes to managing your finances and taking responsibility of your debts. Number 2, your capital. The amount of money you have available to you from your savings account, investments, and so on. Number 3, your capacity or the ability to repay your debt. Number 4, your collateral, such as assets that you can provide as security for a loan. This includes real estate, investments, or your car. Number 5, and the final factor is your credit history, which is essentially your track record for repaying loans and paying your bills on time. Out of the 5 factors, this is probably the most important one, which I'll cover very soon. Next slide, please. So the moment you start using any type of credit, a credit report starts to get built in your name. And anytime you apply for credit, the lender can access this report and see your credit history, your history of being able to pay your bills on time. So your credit report is a summary of your credit history, and it lists your name, address, and social insurance number, your credit cards, all of your loans, how much you owe, and if you pay your bills on time or late. So why is credit report so important? Well, businesses want to know about you before we lend money. Think about it. Would you rather lend money to someone who always pays their bill on time or is always late? I think I'll take the one who pays on time. Businesses look at your credit report to learn about you and then decide if you want to lend, if they want to lend you money or give you a credit card. Another thing to note is that sometimes employers look at your credit report when you apply for a job. Cell phone companies and insurance companies also may be interested in your credit report as well. Next, please. So your credit history is your financial reputation. It's a picture of how well you manage your money, whether you've paid your bills on time, what your outstanding debt is, and whether you've missed any payments. Over time, this data forms a pattern of how well you pay or you don't pay your debt. Anytime you apply for a loan or a credit card, lender will look at your history to help you decide whether or not they should accept your application. Landlords may also look at it to see if you're the kind of person who always pays their rent on time. Your credit score is a number. In simple terms, your credit score is a number assigned to you that shows your ability to borrow money and repay it. The higher the score, the better. In Canada, credit scores range from 300, which either means you're just getting started or you haven't been responsible, up to 900. According to TransUnion, a reputable credit agency, 650 is the average score of most Canadians. And I take a look at mine. I'm happy to say I was at like 859 or something, very happy. To calculate an individual score, a specific set of risks of rules are applied to an algorithm, which draws some assumptions about the individual's spending habit and then assigns a number, the score. And you can also think credit score as a financial report card. A being the best, S means not so good. Lenders may also use your score to set your interest rate and credit limit. If you have a higher credit score, you may be able to get a lower interest rate on loans, which can save you a lot of money over time. A good credit score can also help you qualify more easily for loans. That could mean big savings for you because you could be paying lower interest and have greater repayment flexibility than someone with low credit score and poor credit rating history. And some of you may be thinking right now, well, I'm new to Canada. I don't have any Canadian credit history. Well, RBC has you covered. We understand your situation, and we have special programs in place to provide your first credit card in Canada without any credit history to help you get you started to build your credit journey in Canada. Next slide, please. A good credit history and a strong credit score are important. If and when the time comes for you to make a big purchase in your life, whether it's travel or a place to live, if you don't have the cash, you will need credit. A good credit score helps you qualify for loans and secure a lower interest rate. So I'd like to share a little story about how credit really helped me with my life. So when I was a student, I got my first student credit card with RBC. That just happened by accident because I did not work at RBC at that point, but they were so reputable that my family recommended me. So I had no previous credit score. Right away, they gave me a student credit card because they want to help me build my first credit, very similar to our Newcomer program. I just needed to buy some books, buy some lunch, hang out with friends. Not big of a big credit limit. But as I graduated from university, very fortunate that I got my first real job at that point with RBC, but I needed transportation to get to work. So what do I need? A car. What does that mean? I just got my job. I can't afford a whole new car. So I got a loan from RBC to buy my first car, which is like a Toyota Yaris that I still drive till today. Very, very, very cost effective. And then a couple years later into my career, I met my husband at RBC. I know my life cut me open and blue. We wanted to buy a home together. Such a big purchase, right? How can I afford to come up with $500,000 all at once? So with the good credit, and we understand how the 5 C's of credit worked, and we had a good income at that point, we applied with RBC to get a mortgage. And our dear friend, mortgage specialist Vince, got us approved. And shortly after, we moved into a small, cozy townhome in Stouffville, Ontario. And we still live here today. That's where I'm doing my webinar from. And then later, I'm like, oh, I think I'm done borrowing credit. But that isn't true, is it? We wanted to get legalized and get married. So weddings are expensive for those who are not married, or those who are married are very experienced with this. So we had to draw a line of credit for a home that is called the Home Line Plan at RBC, where you have the ability to borrow money from your own house, very simply, in a form of line of credit. So we took some money from our line of credit and financed our wedding through there. And our dream wedding came true. It was beautiful, but if I had to do it again, I would cut the cost a little bit more. I think I overspent a little bit. So now I'm like, okay, finally, I'm done. I think I'm done. I think I got everything covered. And like I said in the beginning, I am expecting. So what do I think about now? Not myself. I'm thinking about, what if my little girl wants to become a doctor? I might need a student line of credit for her in the future. So that's just an example of how credit and banking and how RBC can really walk you through every milestone in your life and support you through different life changes and key memorable moments. So that's a little bit about my story about how credit really helped me with my life and living my best life. Next slide, please. So there are 2 national credit bureaus in Canada that collects your information and generates your credit report and your credit score, Equifax and TransUnion. A big note of caution: don't trust other sites that claim to provide this information, as they may not be trustworthy. Credit reports are free every 12 months, and you should request a free copy once a year to make sure the information on there is true and correct. Why? Because creditors and sometimes even employers can request this report, and you'll want to make sure that it represents you for who you really are. You can also request your credit score from Equifax and TransUnion anytime, but there may be a charge. That's why I'm very happy to tell you that you can check your credit score through our RBC online banking. We partner with TransUnion, completely complimentary if you are our client. Next slide, please. So all you have to do is log into your RBC online banking account. Under My Services, you'll find a link to view your credit score. It shows you your TransUnion credit score so you can see where you stand at this point. And you can click on Credit Report to see a summary of all of your accounts. When you scroll down, you also see a score simulator, pretty cool, that lets you play around with adding a credit card or a loan or increasing credit limit, so you get a sneak peek of how that change may or may not affect you. As you can see, there's a lot that goes into creating your credit score, and there's a lot you can do to keep it in good standing. So let's do a deep dive into what impacts your credit score. Next slide, please. So there are several factors that influences your credit score, but I would say 2 of the most important factors are in blue and in yellow. Your payment history. Pay all of your bills on time. Paying late or having your account sent to collections agency has a negative impact on your credit score. And your credit utilization, sometimes called your credit balance to limit ratio. In other words, don't max out your credit and try to keep a month-to-month basis of lesser than 50% of your credit limit, as it will affect your credit score. For example, if your credit limit is $1,000, try to keep a month-to-month balance less than $500. The other factors include new credit application. So how frequently you apply for new credit affects your credit score. Only apply credit when you really need it. Too many inquiries in a short period of time can sometimes be flagged as a sign of financial difficulties. It can also be seen as overextending yourself by taking on more debt than you can repay. Credit variety. How balanced is your mix of credit? A healthy credit profile has a balanced mix of credit accounts and loans. Account history. Having a longer history on your credit accounts earns you more points. So avoid closing your accounts if you may need them, because you may need them in the future. A credit history is built over time. Number 6, too many accounts. Having access to too many credit is like having multiple credit cards or loans can be a warning sign of financial distress. It can also make it difficult for you to borrow money in the future. Even if you aren't using the credit card, a bank will look at the credit you have access to and add and evaluate your financial health that way. So now you know what credit is and what impacts your ability to get it. Let's review some of the best practices around credit. Back to you, Emily.
Great. Thanks, Jane. Some great information there. So in this last section, we're going to talk about how to build good credit and good credit habits. And I wanted to call out, we see the Q&A, questions will be the answers. We see the questions coming in, so thanks for those, and we'll definitely get to as many as possible at the end of the presentation. Next slide, please. So when we talk about credit, so risk, interest, secure versus non-secure, poor credit scores, they all make credit sound bad and a little bit scary. But as we've discussed, building good credit and practicing good credit habits today is important when you need access to credit in the future. So your phone bill, your car payment, all of those things that you're doing today are definitely going to impact your likelihood to get a mortgage, or like Jane said, perhaps co-sign a loan in the future. So there is good debt versus bad debt, and it's very key that you know the difference between the two. So good debt is an investment that will grow in value over time or generate long-term income. Good debt generally has low interest rates. So taking out a student loan, for example, to pay for an education that will get you a good job is the example of good debt. Another example would be taking out a loan to start your own business so you have control over your own career. And of course, buying property that will appreciate in value. Those are all good debts to have. Bad debt is debt that is incurred to purchase things that quickly lose their value and do not generate long-term income. Bad debt is also debt that carries a high interest rate, like credit card debt. Because bad debt is more expensive to borrow, it's especially important to pay it off on time. So when you're online shopping and you're purchasing and it's so easy to make those purchases, think of the difference between good debt and bad debt and how easily you're going to be able to pay those things back. Next slide, please. So what are some good ways to build good credit? Start early. Pay all your bills on time. Paying bills late, or worse, having them go to collection agencies can have a very negative effect on your history and score. Even if it's accidental on your part, the process to remove those from your credit bureau is very, very challenging. The next would be reduce your debts. So pay more than the minimum payment. Prioritize paying off higher interest debts, such as credit cards. Why? Because that debt is costing you more in interest than others. If you look at your credit card statement, a few years ago, they added a new statement that actually said, if you only pay the minimum on this card, on this balance, it will take you X amount of years to pay back. And that is scary. Some of them, it will say 20, 25, 30 years it would take to pay back the credit card if you only paid the minimum balance. And when you think about the interest costs, it's scary. So you want to keep that debt at a manageable level. Correct any errors on your credit report. So checking your credit report annually to ensure its accuracy is a good way to prevent fraud and keep your history clean. I love that Jane mentioned checking the credit bureau. When I went to do it through online banking through RBC online banking, it actually gave me an error message. I contacted TransUnion and they told me that my birth date was actually wrong on my credit bureau. So I had to go through the process to send in some identification to clear up my credit bureau, but that could have affected me getting credit in the future since the birth date was wrong. So it's important to check your credit report annually just to make sure everything looks right. Use credit cards responsibly would be the next way. Only use a credit card for things you will be able to pay back. When I worked at our RBC on-campus location at McMaster University, I said to every student, it's so much easier to swipe the card or tap the card than it is to pay it back. It feels good when you walk out with the phone or the AirPods or the new jeans or sneakers, but it doesn't feel good when you see all that money leaving your bank account if you can't afford it. So please use cards responsibly. And last but not least, start early and be patient. Good credit behavior takes months or even years to build your history and score. Think of a reputation. Your reputation's not built overnight. It takes time. That's why it's important to learn the necessities now. Keep in mind that every time you apply for new credit, it shows up on your credit score. Even if you're just checking and seeing, and even locations that sometimes they can get a little bit tricky. So for example, I remember one time I was grocery shopping at Fortino's and somebody from PC said, oh, did you want to get a bonus coupon, a discount on your groceries today? I said, sure, I'd love a bonus on my groceries. Well, little did I know I had actually signed up for a credit card. And 4 weeks later in the mail, I got a MasterCard. And I was shocked. I thought, how did this happen? I thought, oh, shoot, I got talked into the extra bonus points. Now I know better, and I know to ask questions before I sign on the dotted line, but be aware of these things before you are putting your name down for any credit. So I'd love to go to the next slide, and this is where we really want to thank you for your time today. We know that you have amazing questions, and we're going to get to those right now. And we do have our contact information right here. So Jane Chen, as well as myself, we have our names and our contact information. So we'll get through as many questions as we can right now. And maybe I'll just send it over to Jane if she has any other closing remarks before we get to the Q&A.
No, let's get right into the Q&A, and then we can conclude in the very end. So over to you, Sonia. Let's get the questions started.
Thank you. So I'm going to ask everyone to start typing their questions into the Q&A tab if they haven't so already. So I'm seeing some questions here, and I see some of them are already answered because they were asked in the beginning of the webinar. Okay, so will having a line of credit and using a little bit of it, paying back within time, increase the credit score?
Yes. So the amount that you use is not as important as how on time you pay. So what I'm saying is, if you use $500 and you paid it back $500, you are building a great credit history.
Thank you. And what are some things that are looked at when you're trying to apply for a mortgage?
I can take this one as well. So we kind of briefly talked about 5 C's of credit earlier. Those are all the different components we look at when we do a credit application for you. So when I was an advisor back in the branches, what we would have to do is get to know you a little bit, ask you a little bit about your information, and within those questions, we're able to uncover what kind of character you are, how responsible you are, what is your current capital, how much money do you have available for your down payment, what's your capacity, that's a big one, right? So capacity meaning what's your employment income, can I afford this house, and what's your collateral, are you using a home to use as a collateral to get this mortgage, and the final factor is your credit history. So with that being said, with the newcomers, we do have a special program for the mortgages as well, but it is a case-to-case basis. Just ask one of our RBC advisors and we should be able to help you on individual cases. But generally speaking, we look at those 5 C's of credit to determine if we were able to provide you with that mortgage.
Thank you. And how will a newcomer to Canada build credit history when they're just brand new, when they come with really nothing, as in Canadian credit history?
Well, as a newcomer, as Emily and I mentioned earlier, we understand you don't have credit when you first land here. So we have a tailored program for you to get your first credit card without any credit history. As soon as you get that first credit card with the limit that you're assigned, it's not going to be big, but enough for you to generate a report where you use it and then you pay it back. You use it, you pay it back. It creates a credit report and a credit score for you, and then it builds it up from there until you use other loans. Then if you add a car loan on there, then car loan gets how frequent are you how on time are you paying? Are you paying it in full? All of these different factors that we talked about earlier all play a role in it. So it's not too hard as a newcomer to get a credit. You just got to get started and have the right information, like attending this webinar. So it's 2 words that I can give you, 2 sentences, is pay on time and pay in full with any credit. So pay on time means that you don't have to pay any additional interest to the bank. Pay on time, I got it reversed. So pay on time means that you will build a very strong credit history because you're paying on time all the time. And pay in full means that you're not going to be paying any additional interest to any financial institutions because you already paid everything in full as they asked it within 21 days in the case of credit card.
Thank you. So let's say someone had some damage on their credit. How long would it take for them to rebuild their credit?
Really great question. So it depends on the level of severity of how damaged your credit is. It is case by case basis, but generally speaking, if you had a collections item, it will take you 7 years to regain your credit ability. So be very mindful to not have your items go to collections. And I'll give you a real example that happened to my brother. He signed up for a gym membership, and he apparently signed it on a dotted line, and they had a disagreement, and he wanted to cancel it, and he wouldn't pay. He didn't want to pay because it wasn't what he had agreed to. But what had happened is his credit got tarnished a little bit because they had a contract saying that you should have paid on time and paid the amount that they had asked for. So be very careful, like Emily had mentioned earlier, to what you're signing up, whether it's a phone bill, phone company, which is another one, a gym membership, any type of reoccurring payments you have to be very mindful of.
Thank you. Yes, I agree with special gym memberships. That's something that I wasn't aware of when I was very young as well. So, yeah, those suck. I had to pay it. Okay, can you please talk about line of credit a little bit more? Maybe just to elaborate a little bit more. There's a few questions about that.
I can take that if you want, Jane. Give you a break to let you catch your breath. So a line of credit is actually an unsecured, what we would consider an unsecured method of lending. So a line of credit can be used for a number of different things. Some people have a line of credit to perhaps do some work on their home. Some people have a line of credit for emergency purposes. So when we think about COVID-19 right now, if you need a couple $100s to be able to get through the month with groceries, knowing that you'll be able to pay it back in the future, that would be a line of credit. And they can range in amounts from $5,000 all the way up to hundreds of thousands if you have it secured on your home, for example. So talking about unsecured line of credit, that would really be based on your incoming income, your existing credit score, and an advisor would do an application and see if you qualify for a line of credit. There's also, for example, student line of credit. So that would be a specific type of line of credit when we know that you need it for tuition and books and living costs while you're in school. That would be considered a student line of credit, where you just pay the interest while you're in school, and then the principal actually isn't due back until you've graduated and you're working and you can afford to make those payments back. So line of credit, the one thing I'm going to say about it is you have to be careful, because it can quickly become the never, never plan, because the repayment on a credit line is interest only. So that makes it really easy to borrow and then pay very little, because interest rates are low on line of credit. So it makes it very easy to pay just the interest. So I always would say to my clients, if you are borrowing from a line of credit, let's set up a structured repayment so that you have a plan for paying it back. The last thing you want is a couple $1,000s sitting there and you're just paying the interest. That will not increase your credit score. That will put you in a sticky situation because you're really not paying it back. What would increase your credit score is saying you borrowed $1,000 because you had to have a repair done on your vehicle. That's fine, you get the repair done. Now you set it up so that every paycheck, $200 goes back to what you borrowed, so that you'll have it paid back in, say, 2 or 3 months. That would really help your credit bureau. That would show that you're a very responsible borrower, and that would show you very fondly in your bank's eyes. So lines of credit can be an amazing resource and tool, but you have to make sure that you use them responsibly.
Thank you. So I have a question here, and that's something that I've encountered too. So maybe you can answer that question. So this person has noticed that in the past 6 months, their credit score has reduced, in the last 2 months, but they've been paying their credit in full. There's no issues. They haven't even applied for a new credit card application or anything. So what's happening? Why does the score fluctuate without anything happening?
That's a really great question, and I don't think I have the ability to answer it as over specifically. What I would say that is that there are several factors that affect your credit score, as I had mentioned it before. And these are just snapshots. Sometimes when I look at it, I'm at 850. Sometimes when I look at it, it's at 880. It does range a little bit from month to month, but overall, you want to look at the bigger picture. You're not just looking at, is it 10 points different from last week? Was it 20 points? If it's a significant decline, then I would encourage you to call TransUnion or Equifax to find out why the score has been declined, because we partner with them. We don't actually generate your scoring. The scorings are done by those two credit bureaus that I had mentioned before. But if it's still within the same range, 10 to 20 points, that shouldn't, you really shouldn't worry too much about it.
Perfect, thank you. So Angeli moved to Canada last year, and she was misguided by one of the store credit cards. And when she applied for it, she didn't know, that it could hurt her credit score by checking it, and she got rejected twice, and it affected her credit score. What can she do in that situation?
What I would do.
Oh, sorry, Emily, go ahead.
Sorry, Jane, I figured I'd give you a break. I would say take some time before you apply again, because when you apply repetitively, it actually goes against your bureau. So I would say give it at least 6 months to a year, and then wherever you bank, whether it's RBC or your own bank, sit down with an advisor and go through an application with them so we can make sure we're getting all the accurate details. What happens a lot of the time with even online applications in some cases, or those consumer credit cards, when you think about Walmart or Best Buy, is they just want, how much do you make? What's your rent? They'll pull your credit bureau and they'll just spit out approved or declined. They're not getting the full picture. When you think about the 5 C's of credit that Jane reviewed, they're not getting the full picture of your credit. So make sure that you're sitting down with an advisor. And I would say a great way to build a bureau is through one of Canadian banks' credit cards versus a consumer credit card.
100% agree with that.
Just temporary.
Yeah, I completely agree with Emily. In addition to that, sorry, Sonia, in addition, another way to, if it's really, that you really want a credit card right now to really start building it, an alternative that you could explore, again, talk to an RBC advisor and get a secure credit card. So what that means is that you come up with, say you want a $1,000 limit, you use that as collateral to borrow towards your credit card. So then we know for sure that if you don't, if you don't pay, we have $1,000 collateral sitting there. So the chance of us lending you that $1,000 to build your credit is much higher as well, just in the building stage. It's not something that we always put first, but for those who have been victim of something like that, I would encourage you to use that channel. A secure credit card would probably work as well.
That's a great information to know, because I don't think everyone is told this on the spot. So thank you for sharing that. How many days does it take for a credit card statement to be ready? Like, what is the cycle?
21 days.
And I think we answered this question already. Okay. Is it possible for people to transfer their credit history from their country to Canada?
The ones that I don't think it's possible to transfer. However, the one credit history report that we may take a look at in very rare circumstances is U.S. credit histories. But for very, very limited circumstances, and we don't transfer from any other country.
Thank you. Oh, I lost my question here. 1 second.
You're doing great, Sonia. I know we're just all learning in this.
Yeah, no, we're towards the end, so I want to take new questions. I want to make sure that we're answering all the newer questions. What is the difference between a personal loan and a line of credit?
Personal loan is usually against a specific asset. So for example, you'd have a car loan against a car. You'd have a mortgage against a home, whereas a line of credit is what we call revolving. So revolving is you pay it back, the credit is available again. You pay it back, the credit is available. Whereas with a car loan, if you have a $10,000 car loan and you make payments every pay, you know, after a year it's worth $7,000 and then $6,000, $5,000, and once it's paid off, it's closed in entirety. With a credit line, if you borrow $1,000 and you pay it back, that $1,000 is available to you again, assuming that the credit line stays in good standing order.
Thank you. When can someone get a credit card? At what age? So people are asking about their children now.
Great question. 18 years of age. However, if they are younger, they can be added as an authorized user. So what that means is that you are responsible for the debt and you authorize your child to have a part of the credit that you want, up to you how much, and they can use that credit card. But they're not responsible for paying it back. You are responsible for anything that they're spending, and it only affects your credit.
Would that start their credit, like the children's credit as well, or would that start once they're 18?
It starts when they're 18 to have their own credit.
Okay. All right. And so what if you don't want a credit card? You just want to keep using debit. Will you not be building any sort of credit?
You will not be, unfortunately.
Yeah.
You will not be. So we do say, we understand if you want to use debit for a lot of your payments, but we do recommend at least having, you know, when you think about your cell phone, when you think about your other things that you have in your life that you pay for, consider having those on a credit card, automatic payment, for example, just to at least be building that history.
Yeah, that's a great point because you're paying the bill anyways. So whether you're paying Rogers or you're paying the RBC credit card, it's the same bill that you're paying for the service that you got. So I hope that's clear. So you have a monthly Rogers bill payment, $60. You can pay directly to Rogers, or in some cases, you can use RBC credit card as your form of payment for that $60. So on a monthly basis, you're paying the RBC credit card at $60, and then you can earn points, earn rewards, and build your credit all at the same time, and use Rogers services to watch Netflix.
Awesome, thank you. What is the criteria for increasing credit limits? Like, how can you apply for it yourself? Do you get offered? How does that work?
That's a great question, and I would say it's a combination of both. So when it comes to credit cards as well as credit lines, if we see that you're using it really well, you're paying it back in full, you're meeting all the requirements in terms of payments, it's very common that you will get an offer by your bank. I know that RBC does this. You'll get an offer to increase your limit, and you can increase it, and it's there for you if you need it. If you have, for example, a line of credit and you need a few $1,000s more because you're doing some work in your backyard this summer, you would want to go see one of your advisors, and they would do a credit application for you to see if you qualify for a higher limit. And if you do need a higher limit on, say, your credit card, a lot of those applications you can do actually directly through your online banking. So when we think about the time of COVID and really not wanting our clients to be proactively visiting branches, a lot of those services for credit are available directly online through your online banking. So you can complete the application right there if you think that you need a higher limit. We also look at usage, by the way. So your credit score, once again, it always comes into play. So anytime you're requesting more or a new credit, your credit bureau will always be pulled. So when you think about how frequently it's pulled, the usage of it, will always look at the history. It's a big, big piece of whether you're qualified or not.
Perfect, thank you. We're going to take one last question here. Does checking your credit often reduce your credit score?
Not through the RBC online banking. It will not affect your credit score because we have a special arrangement. However, I have heard that if you keep pulling your credit score multiple times, say for example, you're shopping for the best rate at a bank, and you're going to 5 different banks to apply for one mortgage. Typically, just remember, we're very competitive with each other. So the rates are not going to vary too much. It's really about the relationship piece that you want to deal with. Who can you trust to get that mortgage done? So back to that question. If you're going to 5 places, all 5 places are going to pull your credit at the same time. That's going to trigger multiple inquiries. And yes, that does affect your credit bureau report in that case. If you're checking it through online banking, because of our special arrangement with our partners at TransUnion, you're just looking at it. We're not really pulling anything. So therefore, that will not affect your credit bureau report. Hope that answers your question. Great question.
No, that's great, and it's a very safe way to check your credit without going into it and checking. So that's great. It's very convenient. So that's a great feature to have, RBC. So thank you so much, ladies, for today's webinar. Would you like to add anything before I move forward?
Sure.
No, thank you.
I just wanted to thank everybody for being here today, investing time in yourself. I know there are some questions that we didn't get to. You have my contact information. Please reach out to you. We have really tremendous, great programs for newcomers in terms of banking and building your first credit card. I've been through it, as I've mentioned. Please feel free to reach out anytime if you have any banking or not even banking related questions. In addition, we just want to wish you a very safe and healthy time during these challenging, unpredictable, unprecedented times. Remember that you really do have our help and your family and the connections. Keep them close virtually. Do some house parties, be connected, and be well and don't be discouraged when you're looking for an employment in Canada. You will find that dream job someday, as all of us here on the line have. Sometimes it takes a little bit of time. So that's all I wanted to say. Thank you so much for taking the time to listen to me and Emily, and all the best.